Welcome to The Explainer. Today, we're putting a fascinating retail tech company, PopCom, right under our deal in focus microscope. They've got a pretty dramatic history, a huge pivot, and a really bold new plan for the future of automated retail.
So here's how we're going to break it all down. First, we'll get into the core problem they're trying to solve. Then, we'll unpack their roller coaster of a comeback story, look at their new software-first strategy, and dig into the details of their current $600,000 relaunch plan. And to wrap it all up, we'll weigh the bull versus the bear case to give you the full picture.
All right, let's kick things off with the fundamental problem PopCom is built to solve. And honestly, it's an issue that's been hiding in plain sight for decades in every mall, airport, and office building you've ever been in.
I mean, think about it. This is the big question, right? You've got this huge automated retail industry that's full of transaction data, but it has almost zero customer insight. The machine knows what sold, sure, but it has absolutely no idea who bought it. And maybe even more importantly, it doesn't know who walked up, looked, and then walked away. That's a huge gap.
So while it's super efficient for just selling stuff, the traditional model is basically a black box. It leaves brands totally guessing about what their customers are doing, which, in a world where data is everything, is a massive blind spot.
And this is their answer. Instead of just spitting out products, PopCom wants these machines to generate valuable intelligence. They're not just selling chips and soda, they're selling insights.
And this is where the tech gets really cool. The software can do things that, up until now, were really only possible with e-commerce. We're talking about anonymously sensing crowd demographics, tracking sales and conversion rates live, and even verifying IDs for regulated stuff like alcohol or CBD products. It's all about making the physical retail world just as data-rich as the digital.
But you know, PopCom's journey to get to this point has been anything but a straight line. It's a real story of ambition, a major setback, and now a strategic relaunch. This is a comeback story, and it's totally central to understanding the deal that's on the table today.
This timeline really captures that classic, dramatic startup arc. You've got the big capital raise, tons of momentum, and then bam, a crucial funding round collapses. It forced them to hit pause on everything and completely rethink their entire business model from the ground up.
Now, that $7 million number is really important. It shows they had serious early support and market validation from a huge community of everyday investors. This wasn't some company that failed to launch. This was a company that was already flying and suddenly had to figure out how to refuel in mid-air. And this quote from the CEO, Don Dixon, just adds such a human element to this whole restart, you know? It's not some abstract business plan. It's about physically getting their machines out of storage. It signals a real, tangible step forward in their comeback.
So the big question is, how exactly are they planning to succeed this time around? Well, their whole comeback really hinges on a brand new strategy, which is the core of what they're calling PopCom 2.0.
This slide just lays it all out, plain and simple. On the left, you've got the old way, a hardware-heavy model that's expensive and really tough to scale. And on the right, you see the pivot, a much leaner software-first model. They're moving from trying to own all the machines to just licensing their intelligence to anyone who operates one. It's a classic, smart shift from a capital-intensive business to a high-margin, recurring revenue SaaS model.
And all of these changes are designed to do one thing: slash that overhead and focus the company on its most valuable asset, which is its patented software platform. It's a pivot away from a capital-heavy business toward one built on high-margin, recurring revenue.
And they're not just saying, hey, trust us. They've actually laid out a pretty clear 3-year path to profitability for investors. It starts with getting their existing machines working, then scaling up with new clients, and ultimately aiming for a big liquidity event like an acquisition.
So this brings us to the actual deal in focus right now, the crowdfunding campaign that's designed to fuel this whole new strategy. This is the how behind their comeback plan.
They're looking to raise $600,000. And that's not some random number, it's a very specific amount, tied to a very specific plan to fund their core operations for the next 2 years.
And if you look at how they plan to use the funds, it tells a story. The focus is clearly on stability. Look at this. Half of it is going to operations and payroll. Another huge chunk is for cash reserves. That tells you they learned a hard lesson about burning through money too fast. The new priority is sustainable execution. Now, for anyone thinking about investing, here are the top-line terms. It's an equity offering for common stock, and the minimum entry point is pretty low, which makes it accessible to the same kind of community investors who backed them in the very beginning. Okay, to get a truly balanced perspective on this deal, we have to look at it from both sides. So, let's dive into the bull versus the bear case. We're going to assess both the potential rewards and the very real risks involved here.
So the optimistic view, the bull case, really hinges on this new, leaner model being the perfect solution for a clear market problem. The argument is that they've learned from their mistakes and that this software-first approach is way smarter, more scalable, and perfectly timed.
But on the flip side, the bear case points to some serious red flags you can't ignore. This company has a history of raising a lot of money without hitting profitability. The pivot itself, while smart, is basically an admission that the original plan failed, and, crucially, they're still facing some stiff competition out there.
So after looking at the strategy, the history, and all the risks, what is the core bet an investor is really making with PopCom?
At the end of the day, this whole story comes down to a single belief: that learning from failure and focusing on a high-margin software business is the right recipe for success this time around. It's really a bet on experience and strategic adaptation. And that leaves us with the final, big question for every potential investor, partner, or just anyone watching to consider. PopCom has the story, they have the hard-won experience, and they have a much more refined plan. But is the strategic pivot enough to turn a great comeback story into a market-winning success? That's the real question.